Hi, everybody. Thanks for tuning in today. We Hi, everybody. My name is Adele. I'm from the Dessel Group. I'm wearing corporate gear today. It kind of makes me invisible on the blue background. I'm joined by two amazing limited partners who've made lots of interesting investments. We can do ladies first for introductions. Ariel, do you want to just quickly make an introduction about yourself, and then we'll go over to Gary?
Sure, sure. Hi, I'm Ariel. I'm the investor at Siegel Ventures, a single family office focused on female founders and fund managers achieving above market returns and a positive impact on the world, with a portfolio of over 60 different funds and 180 directs.
Awesome. Of course, I took a sip of my tea. It went down the wrong tube. Hey, Gary, do you want to quickly introduce yourself?
Sure. Hi, I'm Gary Gittleson. I've been a 28 years software veteran, engineer, manager, executive. And in the last 4 or 5 years, started doing more sort of direct angel and venture investing. I've done about a dozen direct invests in which I'm an advisor to two of them. And I'm an LP in 9 funds at this point, including both of the Decile Premier and at least five of the Decile Group funds that I can name. I know I saw Doug, and Spatial Capital is one of them. So, um, you know, enjoying the, learning and benefiting from the ecosystem.
Yeah, our Premier One fund is killing it. Obviously, it's closed, so I can talk about it. Wow, Gary, I think we're between a 3 and a 4x, depending on whether you look at stuff, it might be a 4x. Um, Maybe we could just start there, like kind of interesting times, right? Wow. It's like it feels like, there are times of feast and famine, and right now feels like a little bit of a feast. I'd love to hear I mean, at least for me, my personal returns are like, woohoo! But I'm interested in what you're seeing. I'm like, well, where do I buy the mansion? I'd love to hear what your feelings are on what's happening in the market in terms of returns and the general sentiments you have in terms of your investments to kick things off, and then lots of questions on other areas. Who wants to take that
Yeah.
first?
Um, I can jump in. So for us, we deployed really heavily in 21, 22, and so we are actually have been in a slower period in terms of deploying recently as we sort of waited to start to see returns. And so now it's really exciting because we're starting to see those returns come in as the markets open up and really have been laying the groundwork for what our next wave of investments will look like. And so yeah, it's a great time to start to see those come in as we reach sort of year, 4, 5, 6 in our portfolio.
And before we jump over to Gary, and Gary, obviously you're next. So you're starting to see the returns come in, right? Which is great. I presume they're both a combination of paper returns and some DPI. Is that what you've been waiting for before you sort of open up the proverbial pocketbook again to invest in new funds? Has that been the trigger point for you?
Yeah, yeah, and I think that that sort of lack of liquidity is something that a lot of family offices have been facing at the moment. So exactly, starting to um, exactly see some of the performance of our existing funds to decide whether we re-up with any of them, and then also exactly the liquidity component of it as well.
Gary, over to you.
Yeah, I mean, and I also sort of started doing more venture stuff in 22. So yeah, this is year, 4. And similarly, it was a great time to get in because lots of the like you said, the sort of up and to the right that's been happening the last 2 years has really benefited all the investments that were made in 22 and 23. Right now, everything looks great, but it also looks really chaotic and frothy and sketchy. Like I was around in 2001 and watched, the original web bubble, and this feels very similar. So part of me is thinking that, if you started in 22, you got super lucky, and now you can wait a little bit to see what comes back in 26. And if you started in 25, you got a lot of early indications, but I'm not sure that you'll get out before the music stops. So I'm kind of curious to see how much of that froth pays off. When people are raising with no product, no traction, no revenue, no anything but a name and a past success at, eight, nine, 10 figures. Yeah.
Yeah, well, yeah. I mean, that is happening. The famous CTO of OpenAI spun out and raised $2 billion with like nothing
Yeah.
uh, on a $10 billion valuation, right? I mean, that's like hello. But I want to, but I want to just jump into a little bit of the frothiness bit, because I think, you know, for example, one of our investments was X.AI at the zero level. And I actually forgot that I invested in it personally. Uh, because I was like, I might get a 2x, right? I was like, it's my buddy. His valuation's kind of insane. Maybe I'll get a 2x. And the other day we're looking at like 10x in like 2 years because it, merged into SpaceX, whatever. And then now it's going public. It's like, what? And so, and in that process, I'm like, oh, I'm in there. And like, so look, it's the, let's use SpaceX as an example. I mean, it is the valuation worth it? I would say probably. If you look at Anthropic, I mean, it's looking at a $30 billion month. Like, hello. Like, so I think you're a little, I'd love to hear your views. I mean, clearly there is frothiness, but there's also some just outstanding success stories that we've never seen before. And I'd love to see how you guys think about that. Are you like, hey, the frothiness is scaring me away more than the real opportunities are drawing me in? And maybe we can start with you, Gary, since you brought that up.
I mean, to be very, very specific, XAI and SpaceX, SpaceX is a real business. SpaceX is going to print money and has made access to space, something that was impossible 10 years ago. So 100%, even looking at the revenue numbers now, I know where that's going, and I'm very happy with it. But, the same thing again, 2001 was definitely a bubble, but all of the trillion-dollar companies that exist right now came out of it. So will there be trillion-dollar winners? Absolutely. Will there be a whole bunch of web vans and pets.com? Absolutely. And the problem, somebody made a great example of this when looking at things like YC, where the default valuation, if you have nothing, is 4 and 40 now. And everyone was like, if you're a lawyer in New York and you're the best lawyer in town, you can charge $5,000 an hour. If you showed up on the scene 6 weeks out of college and you moved to New York, you don't charge $5,000 an hour just so that you can sound like the $5,000 guy. But that's happening a lot right now. So I do feel like you have to be more selective and you have to understand what these people are doing. It's not that one of them scares me or one of them doesn't. It's just that I look side eye at a lot of the folks that have nothing and are like, well, those guys are raising at 40, I can raise at 40.
Yeah, so it's not that there is no value there, or
Yeah,
it's you just have to separate the froth from
yeah.
the quality.
And
Ariel,
just one more thing is like the other thing is there are, folks like Anthropic and OpenAI and X that are in a position in the ecosystem where there are a lot of startups right now that are looking for a tiny niche. And I go, 6 weeks from now, if you prove that that's interesting, Anthropic will swallow you in a week. And
but isn't that a good thing?
well,
Well,
if
when
they
you say
acquire
swallow
you,
them in a
yes.
week,
If
let
they
me ask, you
acquire
mean
you, yes.
buy them or just
No, just overtake you. And
yeah?
Anthropic can implement everything you're doing in a week. So they don't, the buy versus build is different than it used to be, and they don't need to buy you. So a lot of those folks are not going to get the traction where they thought, it's like, well, the big guys are slow moving and they'll just buy me because it's easier. Anthropic is not slow moving, and it is much easier for them to just build whatever they want.
Yeah, before we go to you, Ariel, let me just double click on that for a second. And I love your thoughts on that as well as the previous question. You know, and let's use the weird crazy phenomenon of OpenClaw. Have either of you used OpenClaw yet? Okay, yes, Gary. Oh,
Yeah.
you're muted, Ariel.
Just
Sorry.
a little bit.
Just a little bit. Okay. Um, I don't know if you know this. I know this from very reliable sources that the founder of OpenClaw got paid $1 billion from OpenAI. Full stop. So technically you could argue it's the first solo corn because it was like one dude, pretty much. He didn't, it was open source, but it was like him open source. Um, and then, as you know, Anthropic copied it, but they have nowhere near the market traction that OpenClaw has. So I do think you're right, and I'd love to hear your thoughts both on the frothiness and value concepts, Ariel, as well as Gary's comments about, hey, the startup world is so different now because these big guys can actually just put them out of business versus buy them.
Yeah, yeah. I mean, I think that increasingly as the ability to code and create software becomes commoditized, the real differentiation comes from other things such as brand and community and go-to-market strategy and so it's a different world than it was a few years ago in that regard. In terms of the frothiness, I think that's part of the reason why we've really shifted to more LP investing rather than direct investing is because I look to the fund managers in our portfolio to differentiate and sort of cut through the noise in their, specific sector, to understand if there's really a there there.
That's such a great transition to the next
Yeah.
question. I got some market questions, but what a great transition. Okay, so we're seeing a rise in specialist investors, right? Like it's just blowing up, right? Historically, it's been roughly 20% of managers are generalists and 80% are specialists, and we've seen LP preferences roughly match that. But in the last year, the LP preferences for generalists have been shrinking, right, quite dramatically to the 5 to 10% level from the 20% level. Now, look, tens of billions of dollars are flowing into generalists nonetheless, like Lightspeed, A16Z, etc., right? But that's because they're going after these, mega deals like Anthropic, blah blah blah, and you everyone wants like the name brand deals, so they're going to the generalist fund to get the name brand deals. And I'd love to hear your views. Let's start with you, Ariel, like how you're picking managers to sort through the froth. Are you looking for specialists or unique deal flow access, or what's your kind of criteria that makes a manager interesting in this environment?
Yeah, I think I'm definitely leaning more towards specialists and following that trend. I think um, there's, a few different reasons for that. I think for me, it's valuable because then I can make sure that their thesis is sort of aligned with our family office's core values and our sector focus as a family. And so um, it allows us to sort of align in that regard. And then I'm looking at is the fund just sort of riding the AI wave, or are they solving sort of a systematic long-term problem? So for us, we're focused on work in healthcare and in climate, and um, the within a specialist fund manager, though, I want to make sure that there's enough sector density, right? And that there's a durable thesis that has enough sort of pond to fish in for multiple fund cycles. And so, for example, in women's health, oftentimes we're looking at a lot of women's health funds right now, but we want to make sure that they're looking also at things that disproportionately affect women or affect women differently and not just like maternal health, things very, very specific. And so making sure that their thesis is big enough that they can continue to exist for multiple fund cycles, but also develop really deep expertise and authority in their domain area.
You brought the word up AI, and then we're over to you, Gary. And I just want to tether that to the specialist and the women focus that even you were just talking about, because our next fund of funds, without going into detail about the thesis, which no one should do, we're moving more towards just realizing that almost every fund we're looking at is AI. So if we don't say, we might as well just say it's like AI, there's AI in our fund thesis without giving the full thing away, because 9 out of 10 things we're looking at these days are AI. And you kind of mentioned it in passing, but we're seeing AI in female health. We're
For
seeing
sure. It
AI.
needs to be there.
Yeah.
It's a
Okay.
miss if you don't mention it and talk about the role that it's playing, but that
It
can't
doesn't
be
need to
the
be the
whole
only thing.
story.
Yeah.
Yes,
Okay. Because you brought it up in passing, and it's like almost like, is it even a fund if it's not it's not doing AI?
totally,
But let's go
totally.
over to you, Gary. I'd love to hear how you're thinking about the froth, since it was originally your point, and how you're picking and specialists and AI.
Yeah, I mean, I've always kind of, I've always been a generalist. So if I'm going to do investments in multiple funds, it doesn't make sense for me just to say I'm going to pick five generalists. It actually makes more sense, just like with AI and agents, I'm going to build a team of the specialists in the areas that I think are interesting. But part of it for me is like when I'm looking at specialists, are some things you can be a specialist in, but as a fund manager, the wrong part of it. For example, like I look at, I've done enterprise software my whole life. If you're deeply technical engineer in enterprise software, you're not a super useful specialist because everyone you meet will be a deeply technical person. And the thing they actually can't do is sell and have the network and understand the buyer. And, it's like in enterprise, a product person or a salesperson or someone who has the business network that can get them credibly into 50 accounts is more interesting than the technical guy who came up with the idea. Whereas in something more deep tech or something more, you might need more technical people. In something more consumer focused, you might need someone who understands virality. Like we said, the brand matters much more. So sometimes I'm looking for a specialist thesis, and then I'm looking for a manager who has the right aspect of that specialty.
I like that you brought something up, which I think we have to talk about. We have some good questions coming into the Q&A. Remember, everyone, in about a few minutes from now, I'm going to start opening it up for questions. Look for that Q&A button and get them in there. Um, which I've been thinking about a lot. I mean, I'm not really sure what the future of software is, right? And this is like I'm not saying. I'm not a doomsday sayer here, okay? I'm not like, oh, it's all over, everyone's gonna die. But it's also like not exactly clear where it's going either, right? So I think you can be, I would call myself a realistic optimist, right? Where I definitely think there is software that's going to continue to be sold, but I don't think it looks like what was sold even a year ago, right? I mean, and then to your point, Gary, the AI companies themselves have this ability potentially to just easily disrupt certain areas, whereas I think some areas they'll have very difficult times. And I'd love to hear, just since you brought enterprise software up first, is that an area that either of you are like, yeah, I'm just going to wait and see, or do you think there's opportunities there? I'd love your, maybe we'll start with you, Ariel, since you brought it up, Gary, and we'll go.
Yeah, I mean, for us, as we think about our next wave of investments, we're looking more at sectors, like I mentioned, that are a little bit more solving systemic, larger problems, like in healthcare and in climate, and a little bit less oriented around B2B software and enterprise. But we have done a lot of work of that in the past. And so I think it's more of like a values thing for our family office and less about sort of optimism or pessimism for the space.
That's a great point. I mean, and values are super important in this. All right, so Gary, you brought it up. Let's jump over to you and hear your
I mean,
views.
I think there's two things that are in my mind. Number one, there's all this discussion. The SaaS apocalypse is real. There's lots and lots of traditional SaaS companies are just going to fail miserably at adopting AI and get superseded by somebody who understands it. And the other thing is, um, AI has given everybody a lot more freedom to customize, and I think people expect the delight that customers get now is in the feeling that everything is tailored and built directly to you. So this idea that I can I have to have the flexibility to prompt customize everything. It's like I want the appearance of boutique software at scale. So I do think there will be this case that software will exist for sure, but it will look very different because everyone will expect it to be much more tailored to them. It's not just I bought the thing out of the box and I spent 8 months learning how to use it. I bought the thing out of the box and within a week it should learn how I want to use it.
Very interesting. Yeah, I mean, and we're in a very early adopter of AI, and just for your benefit, I mean, it's pretty challenging. So I have everyone in the company on Claude Cowork or Claude Code. But there has to be rules, right? There has to be policies, best practices, and there's not. It's not like you can Google best practices for Claude Cowork and Claude Code in a 50-person software startup and get really good answers, or even ask the AIs themselves. You really have to write the book from scratch. So we're living in very interesting times. It makes it a very interesting time to be an investor. Um, I want to. We're getting more questions now, so let me leave you with one other thing that we're seeing, and I'd love your views on. And I'm not really sure why. So we see correlation and causation. So we see data, the correlation, and then we can speculate as the causation. So I'll tell you something we're seeing. I'd love to hear your views on it. I'm just seeing commitments going like this. Okay. March was our second largest month of all time, and it was the largest March we've ever seen. April's looking to be the same, and it might even be the largest month of all time, but it's definitely going to be our largest April of all time. We had a really weirdly large month once because someone wrote an obnoxiously large single check into, so like it was an outlier month, and March was really close to this outlier month. So we're just, and it wasn't this way at the turn of the year. January was pretty crappy. It was actually one of our worst Januaries, but I'm not sure why, but the momentum of investing just seems to be going up and to the right. So that's the correlation. I'd love your views on why you think that's happening, what your instincts are on the causation, and is this a trend that's going to continue?
I I mean, I have three answers that I think are this is something my friends talk about a lot. Number one, FOMO. Lots of folks are watching things happen and they want to be involved in them.
Yeah.
Number two, and this is a very sitting where I'm sitting kind of comment, but um, if you've been in tech in Silicon Valley in the last 2, 3 years, you have money. So there is available capital from a lot of people whose stocks went hockey stick and now need to do something with that money. And three, the trend that everyone is seeing of companies staying private so much longer. By the time you have $1 trillion IPO, the public market, there's nothing left. So people are starting to find VC and other investing channels much more interesting because you'd love to have gotten into these things at 10 billion, not at a trillion. And people kind of look at it and go, if there's nothing left for the S&P, then all I'm doing is getting the tail end. So I think that there's more money flowing into it as an asset class because of that trend of not going public. You can't be Google and all these articles that if you invested
Unless it's
3 years
all
ago,
birds, in which case,
yeah,
yeah.
no, but it's like $1,000 in XYZ company 10 years ago is now X. If you start out at 2 trillion, the answer is going to be not 1,000X.
Yeah, yeah. Though the all bird story is kind of funny. Yeah, so I was going to double click on that last point, but you basically
Yeah.
right. So something coming out, let's say SpaceX comes out at 1.4 trillion, it might get to 10 trillion. Actually, that might be
Yeah.
one of that could have some growth. But a lot of these companies are going to
But
come
10
out at a
years,
number
but
and
10 years from now, it won't be a quadrillion.
you never know. No, I'm kidding. Yeah, agreed. Ariel, what's your views on the causation of
Yeah.
what the correlation we're seeing?
I mean, I would echo what Gary said around FOMO and the bandwagoning effect, right? Like I'm very part of various angel networks as well, and I hear folks there saying, I really want to make sure that I'm on the AI bandwagon, that I like am not missing out on this entire wave. And so I think that folks are coming into the ecosystem right now who were not necessarily LP investing before because they want to make sure that they're capturing that value, but they don't know where to start.
Yeah, it's super interesting. Like as I said, I even forgot I invested in X.AI until at 10x, and I was like, huh? And then as a result, now that it's 10x, and my portfolio is on the whole probably averaging like a 6x over not that long, like 2, 3 years. Like I'm like, oh, I should be investing more as well. So it's sort of what you were saying, Gary. All right, lots of great questions in the Q&A. What an exciting time, though. Really, I mean, before we get into questions, I just want to share how personally fortunate I feel. And maybe I'll leave with this. I'd love to hear your views on the same sentiment that I'm about to share. I initially entered the AI era with a modicum of fear because I was concerned what might happen. And now that we're kind of, I want to say midway through, but in some path along the way in the AI era, I'm actually really personally excited, and my fear is largely gone. I mean, I'm not saying it's zero, but it's like near zero, and excitement prevails. And I'd love to hear your sentiments. Maybe we'll start with you, Ariel, and then over to you, Gary, about just the general moment right now, and then we'll go to the questions.
Um, I suppose I'm a little bit more skeptical than you
Okay.
are, but cautiously optimistic, I would say, and hopeful that we can start to see meaningful impact and change as a result of these new technologies and innovations. And so I think that yeah, I'm hopeful, and I think that some of the activity that we're starting to see is yeah, making me optimistic.
So cautiously optimistic. Gary?
Um, I've always been more cynical than skeptical. Um, I have a few friends who are the super early adopters, and I let them blaze the trail and tell me when it gets good. So I don't, I haven't wasted my time on a lot of things until they got really good. But the last 4 or 5 months, I've been pretty deeply, involved. And the reality of it is, especially in the last 4 or 5 months with Opus and a few other things, for certain classes of people, AI is a superpower. There's no doubt about that. They can do things they could never even dream of doing before. By the same token, the recent stuff with Mythos and Project Glasswing and everything, Dario and the guys at Anthropic are doing a very responsible handling of the power that they have, and I'm much more cynical about others being as responsible. And I always go back to the they figured out that they could and never gave any thought to whether they should. And there's a lot of things that AI can do that we probably should. And I've gotten into lots of interesting philosophical conversations with people about what you should do with AI. One example, if we have 5 seconds first.
Yeah.
G2 Patel at Cisco wrote a LinkedIn post 6 or 8 months ago about, in the future, AI will be able to replicate your deceased loved ones and you can have conversations with them. And I sent him a note and I'm like, that one hits a little close to home. And I don't really need to talk to an AI to know what my deceased loved one would have said to me. And I think that that's one of those cases where just because you can doesn't mean you should. And I think that's creepy and wrong in so many ways. And that was one of those posts on LinkedIn that a lot of people resonated with. And
As being
frankly,
wrong.
fairly, fairly not so harmful. But I mean, in terms of like, psychological effects and way, people talking to their AIs and getting into, relationships with your AI, even ignoring the cybersecurity and other things, like just the social impacts, there's a lot of things that are questionable.
I have something funny for you, but okay, going back to you, so you're cynical. I know that we're friends, so I love your cynicism. Actually, I think it's part of your charm. So within your cynicism, are you more positively cynical, or are you just in the middle, or more cynical?
I mean, it's very much a long tail. There will be 1% of things that are absolutely magical and life-changing. There will be 1% of things that have the potential to be, the world's next nuclear arms race. And then there's a whole bunch of stuff in between that will be, pleasantly surprising or pleasantly annoying, and the world will sort it out.
So my friend, I don't know if it so. I know you do circuitry and actual deep engineering. He is not, he's an engineer, but he's not, was never able to make circuits. The guy is
Yeah.
building, I pulled this up. He's actually building himself circuitry with the help of AI. He's kind of what got passionate about music, and it's just amazing. He's building his own mini amplifiers and everything. I forget what this one is. I'm
For
sure.
for people with ideas,
Oh,
maybe lack some technical knowledge or skill, it's a superpower.
yeah. So this is he's doing funny things with tech just to do funny things with tech. So this is a refrigerator, which is also an amplifier. So you can chill your beer and amplify your music at the same time. FYI. Because, that's what we should use our great engineering powers for. All right, let's go into questions. It would be good to understand LP opinions on track record and proof of first-time fund managers. Are SPVs while raising the first fund a good approach to prove track record? And what we can do here, guys, is either both of you can, we got a lot of questions now, so either both of you can answer or one of you can answer. So what's your view on track record and do SPVs help with that?
Yeah, I mean, first-time fund managers aren't going to have an institutional track record unless it's a spin out. And so I'll look at their track record as an angel investor or as an operator, and it's less about those like high-level metrics and more about like how did they behave? Did they pick well? But SPVs definitely. And for us, we also, as we do direct investments, we look for fund managers who will continue to do SPVs. Um, as and offer that to LPs. So definitely that's a great way to get started.
You want to add anything, Gary?
Yeah, I mean,
If not,
from,
that's okay.
yeah, I mean, from a track record perspective, unless you've done, 40, 50, 80 investments as an angel, you're going to do more in your first fund than you did in your entire track record. So saying I did 3 investments and one of them was a unicorn isn't a lot of signal. So I'd rather look at your process and your thesis and your expertise than I would at your track record because a lot of that could be noise.
I just gotta tell this story. Sorry to tangent for a moment. So on April Fool's Day, April 1st, we announced this thing called Free PV, which was a free SPV service. We got it was a joke. But we got overwhelming demand. People are like, about time, it should be free. So we're like, So we're like the other day, we're like, God damn, there's so much demand, and it can't keep. We're like, no, no, it's an April Fool's joke, and people are still coming in. So we've decided, FYI, we're gonna do at least one free SPV for everybody. So free PV went real uh, because of an April Fool's joke. Okay, Tanya's asking, from your perspective, what drives a decision to back a person or a team, pre-product or pre-traction in some cases? While other instances is expected to share catalytic capital, which may be a fraction of asking amount of the pre-production traction, just to prove the model. So I guess they're asking this more from the direct investing perspective, right? Like what makes you take a pre-product, pre-traction team seriously? Um, and I know you've slowed down on that, Ariel. So
Yeah, I
what?
mean, I think it's if there were a repeat founder is what would let you do that, is the scenario that I can think of. I mean, we do some really early stage investments, but it's folks that we know really, really well. You mentioned with XAI, it was someone you knew. That's sort of the exception that I see.
Yeah. And I mean, it really depends on what they're building. Again, nowadays with AI and software, you should, unless you're building something incredibly huge and complex, you shouldn't really need capital to get to something you can show me. And you should, if you're building, if you're building, I don't know, you're going to start a new aircraft company. I can understand that you're pre-product or pre-traction, but then it's a question of what are you asking for and what meaningful milestone does it get you to?
Or the beer amplifier
Yeah.
at Cooler,
Yeah.
which I know you're all waiting to fund it. You can talk. No, I'm kidding. All right.
I'll send the guy a note later today.
This is a good question. How do you think about, I'm paraphrasing, how do you think about venture studios? Do you look at them more as a fund or more as a company? Um, and are they something that's on your radar?
Yeah, we don't invest in venture studios. I think it's an interesting hybrid between the two. My gut instinct is to say it's a little bit more like a direct investment, but there's a lot of similarities with the fund side as well. I think it's going to be definitely like a niche type of LP for that.
Yeah, and I have not invested in anyone who's a pure studio, but there have been funds that after they, got to a certain size went, maybe I want to put a small portion of my fund into, directly incubating some founder that I know that I want, that I really think has something. So like if it's their core thesis that they're going to be a studio, that's trickier, especially for small funds, because I don't think they have the resources to really dedicate to a large number of things they're going to try and incubate. Building your own sort of mini incubator takes a lot more infrastructure than most of the small funds will have. So
Yeah, they're popular though. We're seeing about 10 to 15% of our alumni now, but more like 15% are venture studios. So it's the one of the single biggest. Now, of course, there are venture studios for everything, but it's one of the single biggest niches within what we're seeing coming out of VC Lab. Um, Man, so many good questions. What? Let's go. Okay. This might be good for you, Gary. So AI is attracting a lot of capital right now, but many persistent problems require hardware or physical processes or infrastructure solutions. Um, how is the current AI cycle influencing LP willingness to invest in those longer horizon capital intensive opportunities? We just talked about the plane. Gary, you come from that world.
yeah.
I'd love to hear your thoughts on that.
I mean, there are a lot of deep tech funds that are building things that are long term, and capital intensive. And I think,
Robotics.
yeah, a lot of, and I've said like robotics and space in general, are in that camp. Energy is in that camp. And those are three of the things that I think will be most transformative over the next decade. So I kind of feel, you know, with the right team, with the right idea, with the right market, I don't have any hesitation in getting into those areas. I think they're really exciting, but those are big swings, big misses. That's not, a 2 year return. That's not, unless somebody swallows it. You have to really believe in that mission. You really have to believe that that team can make a dent.
Ariel, do you have any thoughts on that? Or what's your view on robotics? Let's just.
Yeah, I mean, I think we as a family office we're able to be sort of patient capital and not necessarily have that, 5 to 7 year time horizon that a fund does. And so we would be more inclined to make those types of infrastructure bets as sort of building out a diversified portfolio. But I think yeah, I suppose it's going to be challenging for fund managers investing in those spaces because
Yeah,
of
because
that
they can't
expectation.
wait.
Yeah.
Yeah, yeah, yeah.
Yeah.
Roberto's asking, I'd love your views on this. I'm going to cherry pick some really great questions. He's asking, hey, what are your thoughts on emerging markets? And I'm curious about that as well, because very easy to get enamored in the US and Silicon Valley because there's like so much just like money and big companies here, but there's also opportunities around the world. Love to hear your thoughts on that.
Yeah, I mean, we invest exclusively in US based funds and companies, but one of our top performing funds we caught up with the other day is executing a really, really interesting strategy where they're taking their companies and building really deep connections in Kenya, actually, and
Wow.
leveraging those relationships to deploy and activate the funds or the companies that they've invested in over there. And so I think there is really interesting opportunity for returns for us with that approach. And so I don't know that that's necessarily going to shift our strategy in terms of our investments, but I think there's a ton of opportunity there if you are equipped to make those bets.
So just to clarify, they were originally mainly doing US and then they did
No,
some
so the companies are based here, but what they're doing is they're selling into the
into Kenya.
infrastructure plays in Kenya. Yeah, exactly.
Okay. Okay. So the fund and the companies are based here,
Yes.
but it has a market
Yes, exactly.
overseas, and
Exactly.
that in
Yeah.
this case, Africa.
Yeah.
Yeah, I mean, Africa is definitely going to be an interesting market for sure. I mean, there are already some billion-dollar companies there that have. So, Gary, do you want to add to anything to
I
that?
mean, the two things that were first in my mind was, one of the funds that I'm in, their big sort of wedge is companies outside of the US that they will essentially bring to the US. And this kind, there's a lot of things that get incubated elsewhere. And I always go back to the example of WhatsApp. WhatsApp worked because the problem they were solving existed where they were solving it, and then it applied elsewhere. Like you would not have founded WhatsApp here because the problem they were solving didn't really exist here. So, Africa and other places, there are a lot of
And
India,
actually, WhatsApp's used mostly
right?
outside.
But it's like the places that, like there are problems that in the Silicon Valley you simply won't see, so you don't think to solve them. So I do think that we have a blind spot, and I think there's a lot of interest in consciously trying to avoid that blind spot and looking at what problems exist elsewhere. And then once you have a solution, can you bring them to bigger markets?
I mean, it was that WhatsApp story is amazing. We charged $1 a year and gave you full phone connectivity and everything. And like, obviously, that's pretty appealing to outside the US, where, that's not a small amount of money, but it's a relatively small amount of money. In the US, it's like, what? What? It's not even a coffee. Um, Matthew's asking, as VCs, we know the most important part of the startup is the founder, so we spend a lot of time diligencing the founder. And then how do LPs actually do this with the VCs that they invest with? how long does it take, and what are some green and red flags that you see? So, yeah, that's a great question. Like, what are your processes to, I guess, look at the actual partners in the firm and the red flags or green flags, and whoever wants to take that one first. Great question. Thank you, Matthew.
Yeah, I think the time horizon really depends quite a bit on the LP, and some will want to take, several years to get to know a fund manager, and some can move quickly. And the diligence also really varies pretty widely, and some will have a very sort of institutional type of process, and some are very quick. For us, like to get to know someone over a longer time horizon. I think it involves meeting multiple times, meeting face to face, certainly. We sign up for their newsletter, we'll go to their events. We'll talk to the founders that they've invested in. We'll talk to their other LPs. The references are really huge in terms of diligence for us. And I think just really understanding how they think also is a really big piece of it. And so looking at an example of a deal memo that they did, or their thought leadership pieces and market research from their newsletters, or attending an AGM. Like, there's a lot of different ways that you can get to know someone over time, and make sure it's a good fit.
I
Um,
want to double click on the thing you just said, and this is something that we should probably do too, because we have our AGM coming up. You really should, as managers, invite prospective LPs to your AGM. You should invite them to look at deal memos, even that you're actively working on, certainly ones that you've done in the past. Because to your point, it's not, the relationships aren't forged in an afternoon sitting at your computer having some tea or coffee or whatever. It's forged over weeks or months. And then when you have that relationship, yeah. So Gary, do you want to add anything to that?
I mean,
To
time horizon, I think the shortest I've done has probably been a month. The longest, two or three of them were 6, 7, 8, 9 months of just getting to know that person. And I think part of it is, again, especially for new managers, like I said, it's not track record necessarily. For me, at least, since I have a very specific thesis of kind of what I am looking for in funds that I work with, it's alignment to that idea and evidence of that because, you know, at some level, people will sell you what you want to hear. So part of it is getting to the point of do they really mean it, or are they just saying it because that's what I told everyone I wanted them to say?
There,
So,
there, yeah, there's a great follow-up question to that. There's some great questions. Got 10 minutes, so if you have any last questions, pop them in. But there's a lot of great ones. So once you invest in a fund, so now you've made the decision to invest. This is an anonymous question. What is the type of relationship you're looking for from the manager? Can you share how some of your favorite fund managers engage with you? That's also a good some specifics. So we talked a little bit about the process for looking, and now there's some for processes post the investment. Love to hear either of your thoughts and favorite story.
we see ourselves as very active partners, more so than limited partners. And so, we value a close relationship with our fund managers. Of course, we're getting sort of like the quarterly newsletters and the AGM and the annual letter and things like that. But we like to have a more direct relationship with them. I mentioned already, we like to look at fund managers who offer SPVs for us to double down in some of the companies that they're seeing and collaborate with us in that way. Some of our fund managers, will co-host a dinner together alongside a big industry conference, or um, just they'll have us talk to a founder in our subject matter area expertise and give our opinion on it. Um, so we have very close relationships with some of our fund managers, and we enjoy that. I think the other motivation for us in investing is to learn from our fund managers. And so I love when they are able to sort of give us a peek under the hood of why they're looking at a space, what their competitive analysis looked like, why they picked one company over another, and allow us to sort of understand the way that they think and learn from them.
What do you have any favorite stories and you don't have to name the manager, but like it could be the circumstance, like we went to dinner or I got to an AGM or we saw this or
Um, yeah, I mean, I think I'm trying to think of a specific anecdote or story, but I think ultimately, we want to have that type of collaborative relationship. And yeah, I'm trying to think of a specific story, but
well, if
maybe
you think of a
Gary
story,
has one.
Gary, you
Yeah,
can
yeah.
go and
I
we'll come
mean,
back to you.
there's very basic things, all of the funds that I'm in at a bare minimum, I expect, quarterly LP call. Three or four of them do at least one of those in person as a dinner, so annual dinner or something like that. Um, I have asked every single fund that I'm in, and I'm pushing this on all of them. It started from one, but I've now pushed every one of them. When they make an investment, I want to see a webinar with the founders. Where basically they introduce the founders of their new portfolio company to all the LPs. And I've asked all of my funds to do that because I think it's super useful. I really like folks who do, you know, not necessarily a monthly update because there's not always something to update, but a monthly, like it, like Ariel said, a newsletter that kind of says, this is what's going on in the industry and this is how we view it. And these are our thoughts and trends that we're seeing and things like that. Because I like it as sort of an educational thing. But for me, even deeper than that, the ones that really shine, my thesis is that want to do investing because I want to stay involved in the ecosystem. So the reason the webinars is useful is because it gives the LPs an opportunity to directly engage and say, here's a way I can advise or help or add value. And I've done it with the funds. There are two funds that I'm in where I meet with them twice a week and go over every company they're considering and help them due diligence if it's in an area that interests me. And they do that with all of like they offer that to all of their LPs. So there may be a call with 10 of us and it's like, okay, you can look at this and you can look at this and you can look at this and report back to us with your insight. So like I like that level of involvement because that's why I'm doing the investment. I don't want to just write a check and walk away. I'm doing it because I want insight into the industry.
Any favorite stories for you?
Um, Well, there's a bunch of things that are a little over the top, like Brian Bell's Team Ignite did their annual thing is a 3-day LP meeting in Cancun. So, when I said I was doing this, every one of the other funds that I mentioned it to, their LPs are like, how come we don't get a trip to Cancun? And maybe that's a little over the top, but it's on brand for Brian.
That sounds pretty awesome, actually. Ariel, did you come up with a favorite story or?
I mean, I think one fund that I really love, they published a really robust report about their, one of their focus areas within their thesis, and it was really, really insightful. And then they featured different companies within it, and then I met with one of the founders within it, and she's really wonderful, actually based nearby here. And so we're getting coffee in person and I'm introducing her to other investors in our network. And so you can go down a path of engaging in a variety of different ways based on um, each of these different touch points. And yeah, I share Gary's enthusiasm for a really hands-on approach if your LPs want that and sort of tailoring
Yeah.
the level of engagement to their desires.
One of our funds publishes a book every year and it's fantastic. It's really their thesis, but it's like how these companies align with their thesis. It's like almost
Yeah.
like a tabletop book. And it's
That's
Yeah.
awesome, but it's a lot of work.
yeah, yeah. We probably we
Oh,
don't do that, but I
I
was
mean,
like impressed that they did it. Neil's asking a question. I love this. What's a great success outcome for you as an LP that you would say, "Oh, I'd love more of that," right? And I think that's a great instructive example. So it's sort of before we're saying like what was a great story of something that happened. Now, like what's a great success outcome? It could be with the fund itself. It could be maybe with a portfolio company in the fund. And if you were to say, hey, if I had more of these, it would be a total win. I mean, you could say SpaceX, Gary, with us.
I mean, you know, big wins are always good. I think, Ariel's comment of, folks who did an investment and then, when they came back to raise the next round, offered to co-invest so you could kind of double down and get, move in more aggressively on the things you really believe in. Those are always great when they succeed, to give you the opportunity to really, put your money in where there's more signal.
Yeah, so we think about what we do in terms of, financial capital, and obviously there's a clear return that we're looking for there, but also in terms of social and intellectual capital. And so on the social capital side, we find it really rewarding to use our network to help our fund managers and founders achieve their outcomes. And so when we're able to make an introduction that then leads to an investment, we feel really excited about that. And so recently, for example, we had a fund manager that was looking to close. Um, do a first close and needed a certain threshold for the institutionals to come in. And so we were able to make a connection to another family office with like-minded thesis
Wow.
and help her reach that threshold. Or fund manager or founders as well, as they're going out, maybe for their they came in at pre-seed, we're looking at their seed or series A, we can connect them to other fund managers in our network and help them to reach that threshold. And have a really successful next round. So we look at it in terms of like graduation rate quite a bit as a KPI, both on the fund and the founder level. And part of what we're looking to do is to drive greater representation of women in the ecosystem. And so big KPI for us is, are our funds graduating to raise the next fund? Are they raising a larger fund? Are they successfully meeting their targets and, helping them with in that regard?
We got just a minute left. There's still some great questions, but I'd love to leave you guys with final thoughts. We got lots and lots of GPs still on here. We had a great turnout, actually. Thanks everyone for being here. This was one of my favorite sessions in a while. Any final thoughts for GPs in the market today as to LPs that are, fairly active in the world? Any final tips or pieces of advice you'd like to share?
For us, we're going into, 5, 10, 15-year relationship. And so make sure that you're approaching it with a human element and not being overly transactional. I think that's the biggest advice I would have.
Yeah, I mean, I would echo that sentiment too. Is, most of the folks, and this, to give a little shout out to going through the LP Institute stuff, the idea that, if someone is raising fund one, you want to believe that they are going to build a durable entity that, has a fund two, has a fund three, has a fund four. I want you to treat the relationship like you expect me to be there 10, 15, 20 years later, not that you want to get a check today and we'll deal with the rest later.
Well, thank you so much, guys. This was lovely. We went 1 minute over, but it was really amazing, as always, to speak with you guys. And thanks for taking some time. Thanks, everyone, for showing up here and listening. I found this incredibly insightful. What, at least I'm super optimistic. Gary's skeptical optimism, maybe on that, and so you're cautiously optimistic, Ariel. So let's keep our fingers crossed that it goes to the positive side. Thank you again, everyone, and have a lovely day. Bye, guys.